My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people want to make friends. I'm just trying to make a little money. My job is not just to entertain, it's to educate you. It's to teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. A day like today makes you feel like no matter who wins, every stock could go higher. From tech to aerospace to housing to retail, even healthcare. We saw some tremendous gains, which added up to some excellent performance. Dow gaining 427 points, S&P jumping 1.23%, NASDAQ pole vaulting 1.43%.
All aboard!
In the coming weeks, though, I'm betting that days like today, I think you're going to turn out to be outliers. Hey, you can't expect Dr. Pankos to visit this place daily. Instead, we're going to have to deal with the cold, hard realities of a Federal Reserve that may be a little more timid about cutting rates, given the robust nature of the economy and the numbers we've been seeing. We may be facing days or maybe even weeks of partisan rancor if the election's too close for anyone to throw in the towel. We can't be sure who the next president will appoint to key positions. There's just so much we don't know, which is why I want to change tack entirely tonight. I want to highlight 10 stocks that I believe will do well under either candidate. A who's who of acclamation. Companies that almost have to do well because of seismic trends and savvy managements. Companies that no White House would get hung up on, either because they're beneath notice or they're perceived as good corporate citizens by both sides. Stocks and industries that neither Trump nor Harris had ever targeted in the past. First grouping, let's get right to it. Bargains. I like Walmart. I like Costco. I like TJX, parent company of TJ Maxx and Marshalls. These retailers have done tremendous work pushing back against inflation by using their scale to push costs down, then passing on the savings to you, the customer. Neither candidate can mess with that proposition. Walmart's trying to hold the line on prices in all sorts of aisles, but especially the food aisle. Have you seen these $5 selections they have? It's called the Great Value Offerings. They're incredibly cheap and particularly loved. No, the stock itself's not cheap. But ever since Walmart upped its game by improving wages, giving managers more discretion for what their stores carry, and sneaking in high fashion in the $15, I'm not kidding, the $15 aisle, oh, it has been a huge winner. Costco's got a business model where they make most of their money off the membership card. The model is about getting as much volume as possible, not taking as much price as possible, and that's why everybody loves it. That and, of course, the free samples. I had the little pizzas the other day. Oh, my God, are they good. We love going down the aisles just imagining how much more we'd have to pay at some other store. We love the bathroom, and this kitchen section is so fantastic. Never knew I needed so much of this stuff. TJX is such a go-to chain for clothes that I spend a lot of time perusing aisles for anything my size, whether it be belts or shirts or slacks, as my pop used to call them. Their prices are so ridiculous that you can't pass this stuff up. I can't go by the one down here without going down the escalator and just taking a look. Maybe there's something I don't need that I now need. All three of these retailers work, even if President Trump installs high tariffs. None has any meaningful foreign exposure that can hurt them, even as they all have overseas operations. Next, can you guess it? Netflix. Netflix is one of the world's greatest bargains, and because they make programming for all sides of the aisle, you know that it's not going to get hammered by whoever comes out ahead tonight or this week or next month, whatever. There's no percentage in going after Netflix. We have a habit of waiting for AT&T or Verizon to get better, right? Big dividend yields, lots of opportunity. I say you're waiting, pal, for Godot. If you want a wireless carrier, the outfit that's taken America by storm, the best value is T-Mobile, which is why they seem to report great numbers every quarter. T-Mobile has the best retention, the lowest churn, and its most liked Apple account opener. That's right. They've used Apple. They were the ones that said Apple sales are good. Plus, CEO Mike Sievert hates to lose. That is a great quality in a chief executive officer. Hey, speaking of hating to lose, the CEO of Palo Alto Networks, that's Ed Nikesh Arora, and the CEO of CrowdStrike, that's George Kurtz, are both extremely competitive. They know how to stop cybercrime better than anyone. I know it hurts our diversification efforts, but the Charitable Trust owns both these stocks because I'm a huge believer in cybersecurity, and I'm not going to be left behind by a great stock here. There's so much crime happening online. These companies literally can't handle all the business. Imagine, I call that a high-quality problem. Last night, I saw one of the greatest quarters I have ever witnessed. A quarter from a company that I finally told you to buy not that long ago after fighting for ages. I'm talking about, yes, indeed, Palantir. they've got a big cybersecurity business and do some consumer packaged goods work, too. But they're mainly a defense contractor. Palantir brags about making its clients more lethal. And judging by their numbers, which included accelerated revenue growth and phenomenal margins, they're clearly accomplishing that goal. How strong were these results at Palantir? I'm going to quote CEO Alex Karp, who is immutable, indomitable. I don't know, one of those ims. Quote, given how strong our results are, I almost feel like we should just go home, end quote. Now, there's a guy who's got bravado. All right, anyway, I like the bipartisan nature of not spending as much on defense hardware and training and instead relying on Alex and friends to get it right for you. And that's what they're doing. This one's a real crowd favorite, by the way. It's now up 198% for the year, and I bet it keeps running, regardless of who takes the White House. Congrats to Alex and friends. Next up, everyone wants some environmental play that can work with either party, right? Good luck finding one. But the best I can draw is GE Vernova. The stock's up so much, but in this new regime, whatever that is, you can assume that it has something to offer for every utility and hyperscaler. I know we're all falling in love with nuclear power, right? I get that. And one day it'll be important again. I mean, maybe next decade. Right now, though, if we want more electricity, we're going to need it from natural gas, wind, and solar. GE Vernova has natural gas turbines. They call turbines, strangely enough, windmills, and the best possibilities of nuclear. Although the company would tell you shouldn't get your hopes up for nukes anytime soon because it takes too long to build these plants. I like the fact that they're upfront about that. That's terrific. Finally, let's rope in Cintas. Oh, they've only been on a couple times. I love these guys. It's the company that supplies more than 1 million businesses with uniforms, restroom supplies, fire and safety equipment, some other stuff. You know why I love this one so much? Because it caters to small business. And neither the Democrats nor Republicans can resist talking about how small businesses are the backbone of the American economy. You hang around politicians enough, you can't believe how many times they talk about this issue. Nobody ever lost an election in this country by pandering too hard to small business. Of course, they approach it different. The Republicans want to cut back regulations that make it difficult to operate a small enterprise. The Democrats want to give them small loans or big loans. Who's right? That's not my job. My job is to tell you how to profit from the bipartisan embrace of small business, and you can do that by purchasing the stock that's called Cintas. The bottom line. There you go. 10 stocks that can work no matter who wins in the election. That's right, no matter who wins. So if we get a market-wide sell-off tomorrow, get your engines ready. And if we don't, how about this? Buy small, then hope the Fed says the wrong thing Thursday, and it gives you a better entry point. Can you imagine rooting for that and then getting it? Bam! Otherwise, wait for your pitch. You now know what to swing at.
That was easy.
How about we go to Joe in Jersey? Joe!
Hello, Mr. Cramer. Thank you for taking my call, and thank you for all that you do for us.
Chief, I love it when you call. Let's go to work.
Okay. I'm looking to add a mining company to my portfolio. And
really?
I was thinking of buying Barrick Gold. And what I like about them is that they're also in the sale of copper and silver as well. Nice dividend, I think over 2%. The PE 22. I don't know. Should I buy them?
Well, look, I'm going to be a little pejorative here. I understand they have copper, and I think they've done an okay job. Notice I said okay, but with gold soaring here, you're going to do better with Agnico Eagle. That is a big change for me, but we had Agnico Eagle on. I studied and studied and studied. I said, you know what? Right horse, Agnico. I feel we should go to Massachusetts now. Let's go to Todd in Massachusetts. Todd.
Hey, Jim, first caller, booyah. How you doing?
Yeah, bring it on, Todd. What's happening?
First of all, big fan of the show.
Thank you.
Especially love your CEO interviews. Get a lot of good information.
We got some good ones tonight. I buy both stocks. I buy both right here, right now. What's happening?
Okay, so I've had a hospitality company since 2020, mid-2020, during COVID, up over 300%. Still doing well, though, and I'm kind of wondering. It's Hilton, HLT, and I'm wondering whether I should ring the register or whether I should, buy some more.
You can hold it. You can hold it. I've got to tell you, yesterday there was a crude injustice. Marriott reported a really good number, and all the analysts were like, everyone was saying the stock was going down. Did they listen to the call? I thought it was like a great call. I finished it. I looked at the stock. I said, who are these sellers? What do they know? I mean, honestly, get lost. You know what I mean? The stock's up 3 today, and it's probably going to go up again tomorrow. And I like it. We got a second Joe right now. We're going to speak this time to Joseph in Arizona. Joseph.
Hey, booyah, Jim. Hello from Tempe, Arizona.
Excellent.
question about
Oh, I
Cigna.
love Tempe. Okay, which one's Cigna? That's the only one that knows
Cigna.
what it's doing. They know what they're doing.
A lot of volatility in the stock price lately. Do you think it's
Right.
undervalued?
Well, I tell you, going in, this is one where I actually would need to know who's going to be president. And I have been trying to stay away from the ones where if I have someone who is actually against this group, there'll be some volatility and we'll buy it lower after. That's my plan. I do like Cigna, but I'm not going to pull the trigger right here. Anyway, look, if we do get a sell-off because of the election, now you know what to keep your eye on. Or to just, I say, buy. Because I think these 10 stocks will work no matter what, no matter who wins the White House. I'm telling you they're good. Hey, I got some more. On Mad Money tonight, Texas Roadhouse has spent the year climbing higher. Is this one worth taking? I know it is. I just got to tell you, you'll watch the interview, you'll feel like I'm telling you, this stock is so good that I read the book of the founder, and it's dynamite. Then the major averages finished in the green today. So should investors kick their feet up and enjoy the ride, or could some turbulence lie ahead? I'm going off the charts for answers. And UL Solutions hit an all-time high after earnings. I'm sitting down with the CEO of one of my favorite IPOs of the year to hear what's in the pipeline. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
I can't help myself. I love the restaurant stocks. We've seen a huge divergence in the group. The ones that could offer their customers good value keep winning and winning and winning. But everything else is struggling to be handled in the current environment. What's that about? Kate Cramer fave Texas Roadhouse, the casual full-service steak chain. These guys offer high-quality food at a surprisingly low price, and that's why people keep coming back. That, of course, and the cinnamon butter for their fresh-made rolls. Want some. Last month, Texas Roadhouse reported another terrific quarter with great same-store sales growth. Still one more reason why the stock's been on a tear. Also, last month, management rang the closing bell at the NASDAQ to celebrate 20 years as a publicly traded company. But get this, you now had a more than 2,000% gain if you were in, not too shabby. So does it have more room to run? Let's check in with Jerry Morgan, the CEO of Texas Roadhouse. Get a better sense of where his company's headed. Mr. Morgan, welcome to Mad Money.
Thanks, Jim. Appreciate you having me.
All right, Jerry, let's get started with the most salient thing. There are a lot of people who felt that one of the, if not the most rowdy crowd we have seen in New York involved with the stock market in a long time was your 20th anniversary. Is that because of the incredible percentage gain, or you just have so much loyalty of your employees and your customers that people can't resist going crazy?
That's absolutely right. We like a little rowdy enthusiasm. I hear you got a little fire in you, too.
I like to think I do, sir, but I don't know if I can match what you guys are going, because I've got the Made from Scratch by Ken Taylor, whom I have studied in many different ways. He was a legend, and he has put you guys in a position where people know you can have the highest quality food, and if you get there between 3 and 6, even like quarter of 6, you can get the best price that anybody is providing right now in this country.
Yeah, that early dine feature that we have, 20 years as a public company, we're really excited to celebrate. And probably the most important thing, Jim, was I was surrounded by operators, managing partners of this organization, and they were there to celebrate our success with us because what they do every single day. They create an environment where their employees want to work and their guests want to dine and spend their time and money. So, and we need to earn that. We're going to get after it every day.
Well, I know you have empirical evidence. I went to look to see how you guys did, how much you were hurt by the terrible storms in your area. It turns out that anybody who didn't show up when you weren't open, they came back later in the week. You had people who literally were not going to miss their Texas Roadhouse.
Well, they seem to, if they miss us for a few days, they sure come back in groves. And, that was a terrible event down there. Fortunately, we were pulled through it as a business and our people, but it was exciting to see our guests coming back into our open restaurants.
Yeah, another thing I like about you guys, there are a lot of people who want to help vets. We all want to help vets. I think the best way to help vets is to have actual military ties and do homes for our trips. That is something, by the way, I learned from the great people at Home Depot. You seem to be in a similar tradition.
Yeah, we've been with Homes for Our Troops for 20 years. We just helped fund completely the 400th home. We were very, very excited to be down there to dedicate that home. Come Monday, it is Veterans Day. Last year, we handed out 700,000 coupons and gave away $2 million worth of free meals. So we're happy to see our veterans. We're excited to shake their hand. Come Monday, we'll be all about the veterans of this country.
And again, I like it's not mouth support. You're not just saying, good job. More than a pat on the back, thanks heavens. Now, one thing that I want to talk about value for a second. You and another outfit that I like very much, Brinker, seem to recognize that even though I know we have good employment in the country, prices have really flown up. I mean, you go into a supermarket, you can't believe it. You go into a restaurant, the prices are crazy. How have you been able to hold the line?
Well, you just got to do the right thing by your business and by your guest and consumer. We talk to our partners twice a year to really talk about the pricing side of it. We work with our vendors to try to do everything that we can, but we're working in, it's settled down, but we're working in a tough environment from a profitability standpoint. So we need that top line. And that's really what we focus on, is that top line, a great experience for our employees and for our guests. That will take care of our business.
I think it's fair also. I want you to introduce the other concepts. It's not just Texas Roadhouse. We would be selling short your other businesses, which are very good.
Yeah, we've got Bubba's 33 with burgers, pizzas, rock and roll, and some sports. And then we've got a newer concept, Jaggers, which is more of a QSR business that is really burgers, chicken sandwiches, fresh made salads, and, hey, a banana split milkshake that if you take that tater top and you dip it in there and you pop it in, it will light you up, man. I'm telling you, you're going to love it.
I'm going to Texas next weekend. I'm going to get lit up. I'm going to Houston and Dallas. You give me I'm not kidding. I'm about to get lit. You'd be surprised. Everyone will come back. I'll be one in each city. We don't have one close to us here. It's driving me crazy. Will you please put some in the city or suburbs of New York City?
Yes, sir. We got one in New Rochelle. So you got to get down there and see it. We've done a lot of great things in this last year, but New Rochelle is definitely on the map. We'd love to have you.
Now, you are in almost every state, right? Are you like in 49 states now?
Yeah, absolutely.
Now, how do you handle the idea that you could have national advertising, but you don't seem to have, it might be too small a footprint to be able to go like on the NFL, that kind of thing?
Well, we just believe we get into our local communities and we build a restaurant. We focus on food and service in our community partnership. We don't want to get addicted to that money on the TV side of it. We just go out and shake hands with people. We bring that fresh baked bread and that handmade honey cinnamon butter that you were talking about in the intro. And I'm telling you that people smile and light up when we bring fresh baked bread and honey cinnamon butter.
Well, I got to tell you, okay, so I'm listening to you, and I am thinking, why can't anyone else do what you're doing? Because your moat is not that high, except for in real life, people don't have that. Most of the people I've had restaurants, most of the people are pretty grim. They're not excited to be there. I mean, what is your ticket? How do you get people to be fired up who work with you?
Well, you got to have a passion for life, a passion for your job. And Texas Roadhouse, I was a roadie 27 and a half years ago. I was welcomed to this company by Kent Taylor, our founder, as a partner. And he talked to me about that passion, partnership, integrity, do it the right way. And hey, why not have a little fun while we're working hard and getting some great results? And hey, there are good times and bad times, but you got to love what you're doing, or why are you doing it?
Well, I got to tell you, I am going to maybe not eat Friday. So on Saturday and Sunday, I got to come in on Monday. People say, what the heck happened to you? Anyway, I want to thank you so much. You are just a delight to come on. I've been trying to get you guys on forever. Jerry Morgan, CEO of Texas Roadhouse. It's TXRH. Unbelievable stock. And I'm going to find out how great the food is this weekend. Everybody's back there. Great.
Coming up, it's all in the timing. Cramer is going off the charts and looking at key timing cycles in the S&P 500 that could be pointing to a move higher. Next.
Today, the averages were NASDAQ, best day in a month, possibly in anticipation of the election results. But you need to keep in mind that we don't know who's going to win. We might not have a clear outcome, even if you stay up until 4 in the morning waiting for the votes to be counted. Plus, even if we did know, Wall Street's way too eager to jump to conclusions about which stocks would do better on one candidate or another. More on that later. at a moment like this, where stocks have done pretty darn well, but we have some huge unanswered questions. The first about the election, then about Thursday's Fed decision. You know what? I think it's a good idea to take our subjective opinions out of the equation for the moment, especially when we're dealing with anything political. Instead, we need to fall back on something more quantitative, more empirical. That's why tonight we're going off the charts with the help of Carolyn Baroden. Now, she's that brilliant technician who runs a trading room at ElliottWaveTrader.net and whose work you can find on X, formerly Twitter, at Queen of Fibs. About 6 months ago, she went positive on the market. Nice calls, represented by the S&P 500. I love that. So what does Baroden see in the market right now? All right, first take a look at this daily chart of the S&P 500 cash index. Baroden notes that in the middle of last month, the S&P made a new high that was just beyond one of our major upside targets of 58.19. So there's 58.19. You can see that chart, that nice burst there. For those of you who don't remember, Baroden likes to measure the size and duration of past moves. Then she comes up with key levels to watch by running those moves through the prism of what's known as Fibonacci numbers. It's a very important series of ratios that appear everywhere in nature: flower petals, snail shells, pine cones. For some bizarre reason, they're also relevant to the stock market. Look, I have no idea why this style of Fibonacci analysis works, but there is no denying that these ratios show up at key support or resistance levels, and they show up over and over again. This time, the S&P briefly cleared a hurdle that was created by a 127.2% extension of the previous decline from July 16th through August 5th. As Baroden sees it, the S&P has now hit her minimum upside target of the last decline. Keep that word minimum in mind, all right? Last week's high was also important because it came right at the confluence of 6 Fibonacci timing cycles. Don't forget, Baroden can do the same analysis with both the y-axis of the chart, price, and the x-axis, which is time. She measures the duration of past swings, then she runs them through the Fibonacci machine to find dates where a stock or an index is more likely to change its trajectory. In this case, the S&P had 6 timing cycles that can do between October 16th and October 18th, right here, okay? The actual high was on the 17th. Since then, the S&P's rolled over, even if today's action is down about 100 points from its October high. At the same time, Baroden likes to watch the 5-day exponential moving average and the 13-day exponential moving average. These two in combination are her favorite buy and sell signals. When the 5-day falls below the 13-day, that means the action is getting uglier. It makes her want to sell. Unfortunately, we got that bearish moving average crossover last week, which tells Baroden that this market is now vulnerable to the downside. She thinks it's going to stay vulnerable until the 5-day exponential moving average can jump over the 13-day. Got to go back like that. But, look, it could happen. See, that's kind of edged that way. Now, taking a step back, Baroden believes that this chart's actually still bullish, with the S&P generally headed in the right direction. But in the short term, the bears may still be in the driver's seat, although today was actually a pretty good day. That's why she says we need to be watching for both time and price parameters for a possible near-term bottom. We also need to watch for signals that yesterday's lows might stick. Now, I want you to take a look at the second version of the daily chart. Right here, you can see that we've got a very heavy confluence of Fibonacci timing cycles coming due this week. This is really important. Between yesterday and Thursday. Right on top of the election, the Fed meeting. 6 of them right on top of each other. As Baroden sees it, if we go lower from here, she might want to be a buyer in anticipation of a potential low leading to a reversal back up. In fact, it's very possible that the S&P already made its low yesterday. And today was the first day of the rebound. See, I'm getting you kind of a positive wrap, right? Of course, these timing factors don't tell us anything about price. They don't say there's some level where the S&P is likely to find its footing. They just give us a time window, not price window, to watch. Fortunately, that time window is now. One more caveat. These clusters of Fibonacci timing cycles don't always predict a big reversal. Sometimes nothing happens. That's why Baroden says you need to watch this time window for the key signals that might reflect a new trajectory. Hey, that's the time factor. Why don't we get to the price factor? All right, take a look at this chart. This is the third daily chart of the S&P 500 with all the key Fibonacci levels. Don't you love this? Control all of these. The key support levels start at 5683 to 5696. This is support, okay? And that is down about 80 points from where we are closed today. Then there's a lower zone of support from 5599 to 5629. So you can see this is lots of support here, okay? It can bottom there. With the third one at 5540 to 5580. So now you just have, these are floor. She says we can find our footing at any one of these levels this week, although Baroden stresses that yesterday may well have been the bottom. The low kicked in at exactly the right time and exactly the right level. While we haven't gotten a big buy trigger, the 5-day exponential moving average crossing above the 13, remember I said that when that happens is when you're going to know that we're in a good place. We have seen some smaller buy triggers on the 15-minute chart, meaning a chart where each tick represents 15 minutes of trading. In the end, Broden thinks traders have a reason to be long right now because we're seeing signs that the S&P's found its footing. But she also stresses that the election could send the market into a frenzy, as could the Fed meeting. Even if yesterday's lows doesn't hold, she'd still be waiting for a potential buying opportunity on the way down with all these different timing cycles as a floor. Here's the bottom line. The charts interpreted by Carolyn Broden suggest the S&P may already have turned around. And even if today's gains prove fleeting, there's a good chance the index will make a short-term bottom sometime this week. So keep your eyes out for potential buying opportunities like we might get in the high-quality stocks I mentioned at the top of the show, because this could be a very, very volatile few days. I say we take calls, just my predilection. I like to start with Jim in Georgia. Jim,
booyah from another.
Booyah,
day.
my friend. What's happening, sunshine?
Let me say thank you so much for helping us and helping me. I've been a member of the club for quite a while.
Excellent. Well, Jeff and I and Zev try to do as best as we can for you. And when we hear nice things about club members, I always stop and say thank you. So thank you very much. Now let's go to work, Jim.
Yes, sir. Well, my daughter has been fighting brain cancer for 8 years. And right now, and you've helped me build a war chest in case we need it for her. And I can't thank you enough.
Well, I want to wish her best of luck and strength. I want her to have strength. Let's go to work, try to help, but that's my keyword for you and for her. Thank you.
Okay. You did a video of test flying a drone that had anti-tank capabilities back in. I saw it in 22. I bought some of the stock then. I doubled it in 23. Earlier, they came up with a Switchblade loitering drone. They got $1 billion contract from the Army. These drone systems are projected to grow bigly by the end of the decade. I'm ex-Army. I would have loved to have had these. But what do you think? Should I book some profits now or buy it?
When I hear that Switchblade, I hear that, I know that's AeroVironment. I will tell you this, Jim, without a doubt, I want you to stay in it. I think that both candidates favor spending a little less money on defense and getting a bigger bang for the buck, and that's AeroVironment. And again, I want to wish your daughter best, and I will be thinking of her, and I want her to stay strong. You too. The charts interpreted by Carolyn Broden suggest the S&P has found its footing. Even if volatility around the election picks up, you should keep your eyes peeled for the buying opportunities out there, including that list of stocks I gave at the beginning of the show. Much more Mad Money in. UL Solutions has quietly been one of the best IPOs of the year. I'm learning more about what's driving the action with the CEO and trying to figure out the winning and losing stocks under either a Harris or Trump administration. I'm sharing how I'm sizing up various corners of this market. And, of course, all your calls rapid fire in tonight's edition of the Lightning Round. Stay with Cramer. All right, what the heck happened to the stock of UL Solutions today? This is one of my favorite IPOs of the year, a global leader in safety science that handles product testing for both the industrial and consumer markets. This stock had a big run from when it came public in April through its highs in late August, but since then it's been kind of trading sideways. Today, UL Solutions reported yet another excellent set of numbers, arguably its best quarter since the IPO. They delivered a substantial top and bottom line beat, with management guiding for better than expected organic sales growth in the current quarter. Now, look, initially the stock shot up 14% on news. Thought that was right, soaring to a new all-time high. But then it got hit with a wave of profit-taking. It finished the day in the red. The whole game was erased. I think that's nuts. We need to know more about what's going on here. So let's go right to the source with Jennifer Scanlon. She's the president and CEO of UL Solutions. Jennifer, welcome back to Mad Money. Well, Jennifer, congratulations. This is your third consecutive earnings beat, 9.3% organic growth. I want to give you the floor. How are you able to get such great numbers?
You know, we are thrilled that our third quarter performance extended the momentum that we saw in the first half. And it's really all grounded in these mega trends that we keep talking about: the electrification of everything, the energy transition, the need for sustainability, the digitalization of products. It's just an exciting time to be in a product testing business.
Well, let's go over, let's use the example of battery testing. Now, you just spent a lot of money for a new battery testing plant in Michigan. Also, you're doing work in Korea. Tell us why you need such big facilities. What are you doing in them?
You know, these facilities are really important because as you think about the electrification of everything, there's a complete shift in the way that energy is transmitted, generated, and then stored. And that storage is really what these batteries are doing. They're, electrical storage systems. And what you need to do is you change, the size and the scale of what those batteries are powering. You change the size and the scale of those batteries. And so those testings needs change. So we opened a large-scale battery testing lab in Changzhou, China in 2021. We followed our customers' request to extend our capabilities into Korea. And then we see this tremendous need in the North American market with all of these battery companies coming into North America and the need for them to test their products that are going into these large-scale industrial environments and into EVs and hybrid vehicles. The demand is real. So in our lab, which I still hope you come visit, Jim, we've got a bunker that we built, and we've got this giant kiln and this huge fan and this big pool that we dunk batteries into and shake tables and all sorts of really interesting things to stress test the safety and the performance and the quality of these batteries.
Now, you mentioned Chinese. I know my wife recently rented a couple Chinese cars when she was in Europe. Should we presume that they've been vetted by your company?
We've been in China for over 40 years. And in fact, I was just there last week. And indeed, we work with many Chinese auto manufacturers and their battery supply chain in ensuring the safety of both the batteries going into those vehicles, as well as the charging stations, the enclosures, and the whole ecosystem around the supply chain for how electricity gets into vehicles.
Well, let me ask you something. There are a lot of people who feel that China is not doing well, obviously. There are elements who say if they don't get more stimulus, things aren't good. But the one thing I keep hearing that they never skimp on is safety, that they are incredibly safety conscious and that they would be one of the earliest adopters of what you offer.
Absolutely. What we've seen in our 40 years in China is the manufacturers in China who are looking to get their products into North America, into Europe, and even also locally. Everybody cares deeply about safety. I think it's a universal, fundamental element of humanity that we want to be safe, we want our children safe, we want our families safe. And so we've had tremendous relationships, long and deep, with manufacturers across China for many decades in their pursuit of bringing safe products to market.
I'm thrilled to hear that because they've taken over a huge percentage of almost every country's vehicle fleet. Now, I know that some of the bigger themes, you went over the mega trends, but you talk about themes that drive sales, drive growth, which is terrific. Product launch, you got trade, you have regulation, and you have CapEx. Trade and regulation, trade might go down under President Trump, and regulation might go down under President Trump. Is that something we should be concerned if we're thinking about taking a position in UL Solutions?
For us, if you look at our history that we've published with regard to our growth rates, we've grown under Democratic and Republican administrations. We helped our customers work through a previous round of tariffs. We understand that really what drives our growth and our customers' growth, it's innovation and it's R&D and it's investments in all of those great ideas that continue just to fuel, safety, security, sustainability, and productivity across all of those product lines. So we feel good about our current position and our customers' current positions.
Okay, one last thing. In September, there was a secondary offering, and I know your majority shareholder for UL Standards and Engagement sold a big chunk of shares in a secondary offering. Is that something we should start expecting could happen and be ready for that, or is there no desire to sell it down at a particular level?
I can never speak for any of my shareholders. We do appreciate the relationship that we have with UL Standards and Engagement. They produce a significant portion of the standards that we test to as a standards development organization. And they're also focused on primary research in safety science across a multitude of areas. So you'll have to ask them what their intentions are, but we're pleased with our position and our relationship with them.
Fair enough. I want to thank you, Jennifer Scanlon, President and CEO of UL Solutions. Once again, congratulations on a terrific quarter, and it's great to have you on the show.
Great to see you, Jim. Thank you.
Thank you, and I hope to visit you in the bunker. Maybe I'll be back in a moment.
Please come visit.
Coming up, Cramer takes your calls, and the sky's the limit. It's a fast-fire lightning round. Next.
It is time. It's time for the lightning round. And then the lightning round is over. Are you ready? Skate that. Time for the lightning round. Let's start with Gary in Alabama. Gary.
Hey, Jim. Thanks for taking my call. Before I get to my stock, I have to tell you, I bought NVIDIA in 2019 on your recommendation. Now I am up 3,500%, and I'm one of those NVIDIA millionaires that you and Jim can talk about. So
I got a text this weekend from an old friend. He said his daughters are both NVIDIA millionaires as they watch the show. NVIDIA millionaires. Now that's a club I want to be a part of. Let's go to work.
Fantastic. How about Broadcom? Buy, sell, or
I like
trade?
Broadcom. I think Octane keeps delivering. When we were out at the coast, which I put another term for like San Francisco, I absolutely loved what Octane had to say. He came, he saw, he conquered my brain. I like Broadcom. Let's go to Cy in Florida. Cy.
Hey, how's it going, Jim?
Having a good day. How about you?
I'm doing great.
I voted it. I was the first person to vote today. First person to vote. Yes.
Okay. Well, thank you. Well, I'm asking about Skywater since we're talking about both.
Skywater is a very complicated story because they're losing a lot of money. I got semiconductors that are making money hand over fist. I'm giving you Broadcom because I'm a charitable fella. Let's go to Anthony in California. Anthony.
Booyah, Cramer.
That was the best. I know it's only like Tuesday, but that's some hell of a booyah. Go ahead. I'm sorry.
Hey, I just want to get your take on IES Holdings, symbol IESC.
Yeah, this is one of those. This thing hit a 52-week high today. It is a really good company. When you got these companies that serve and maintain electric, plumbing, uniforms, they work. I think you got a great stock there. I may have to go to Ben Stoto, research director and also chief scientist, and maybe we do a little piece about this one. Let's go to Jim in New York. Jim.
Hey, booyah, Jim. This is Jim in East Northport, New York.
All right, Jim to Jim.
Saquon Barkley, you're welcome. And STGI, it went down 50 points in like 4 weeks. What's up? They have a new executive team?
You know what? They rang the bell yesterday, and I was quite surprised. I was going over their numbers because I saw it like you did, and I think it's a buy. I think that there's going to be a lot of stock issuance, a lot of bond issuance, and that this is you hardly ever get this stock down here. I think it is a buy, and I would pull the trigger because it's good. Let's go to Kali in California. Kali.
Hey, Jen. Booyah from the West Coast.
Okay, let's go to work.
Newer investor.
Okay.
My dad's been watching your show for some odd years now, and I'm going to pick up his torch where he left off.
Oh, I love that. I see kids watching with their parents. I see the grandparents with their kids. I love it. Let's go. Let's do something. What do we have?
All right, man. I'm calling in about Merck. It recently hit a 52-week low. I have a decent-sized position now, wondering if I should add.
I want you to buy more. Let me tell you, I've been going over this story, and a lot of it was China. China has wrecked so many companies, but then they wouldn't give their own people Gardasil. How much do they hate us that they wouldn't give people what they needed to be able to stop HPV? It is a shame. But I think that business will come back. In the meantime, I like Merck's last recent acquisition. I think you're in good shape with Merck. I want to be done. I got to go. And that is the special Election Day Lightning Round.
Lightning Round is sponsored by Charles Schwab. Coming up, Harris stocks versus Trump stocks as people make their way to the polls and voting comes to a close for Decision 2024. Cramer's explaining why the two groups may not be as clear as black and white or red and blue. Next.
Let me ask you something. If you had the results of the election in hand, would you really know what to buy or sell? Making that call is a lot harder than you think, and it's why I started the show with a list of stocks that can thrive no matter who wins, because they have no natural opponents in Washington. But when it comes to many stocks that seem obvious for one candidate or another, there's a yin and a yang dynamic that doesn't get enough attention. Take Apple. Now, we know that the Biden Justice Department is no friend of Apple. If anything, they seem aggrieved by Apple's level of dominance and what it's done to stay at the top of the cell phone business. As Attorney General Merrick Garland said, and I quote, Apple has maintained monopoly power in the smartphone market, not simply by staying ahead of the competition on the merits, but by violating federal antitrust law. End quote. Pretty ominous. So should you sell Apple if Harris gets elected? Not so fast. First off, Apple fell to 171 when the Justice Department started gunning for them. Now the stock's in the 220s. Not so bad. Second, even if you're worried that Harris will stick with Biden's antitrust appointees, what makes you think the company would do better under Trump? Bank of America just published a terrific piece on Apple this morning titled, quote, Thinking Through Various Election Outcomes. End quote. They explain how Trump's proposal for a 20% tariff on all foreign-made goods would include Apple's goods. According to the analysts at Bank of America, if we get those tariffs and Apple doesn't raise prices to offset the damage, it could cost them 30 cents of earnings per share. Now, that is a meaningful hit for a company expected to earn $7 and change next year. It might cause downgrades. Sure, Apple could move its manufacturing from China to India or Malaysia or Vietnam, but they can't do that overnight. And it might not even matter if the tariff applies to all imports, right? So knowing that, how can you conclude that Trump's better for Apple and Harris? I love Apple. I say don't trade it. But it's impossible to know which candidate will do more damage, right, until we start hearing about cabinet appointments. Sometimes, by the way, it just doesn't matter either way. The Federal Trade Commission has it in for Amazon, to the point where I can see them breaking up the company if they rack up some wins in court. I honestly don't care if Amazon gets broken up. There are synergies to keeping these businesses together, though. But I bet Wall Street would just love a spinoff of Amazon Web Services, too. Great gross margins. Plus, like Apple, Amazon has been an incredibly strong stock during the Biden administration, despite the hostility from the FTC. A Trump FTC would definitely be more friendly. But don't forget, Trump hated Amazon when he was in office. He thought they were ripping off the post office and evading state sales taxes and putting traditional retailers out of business. There was tremendous scorn. Hey, how about the oils? Everybody always assumes Republican president will be much better than a Democrat for the oils, right? I mean, they're the drill baby drill party, and Trump personifies that. But that only means Trump's good for oil production. It doesn't necessarily mean he's good for the oil industry. In the first Trump term, there was so much drilling that prices cratered. The oils have done better under Biden, who seems to have real contempt for the industry. The Democrats have a very different view of fossil fuels, so they make it harder to drill, which means less supply and thus higher prices. Semis? Okay, the Democrats have historically been champions of the semis, recognizing that a company like Intel is of national importance. The Republicans look at the federal subsidies and they go into Intel and they want to cut that spending. I can't recommend Intel here because I see no catalyst that could drive it higher, but I do think the stock has bottomed. In the end, this presidential prognostication game is meaningless until we start hearing about the cabinet appointments. Those will tell us a lot. Then we can figure out really who the winners and losers are. Right now, though, there are just too many political angles to every single stock story. I like to say there's always a bull market somewhere. I promise I'll find just for you right here on Mad Money. I'm Jim Cramer. Our election night coverage from the New York Stock Exchange starts now.
All opinions expressed by Jim Cramer on this podcast are solely Cramer's opinions and do not reflect the opinions of CNBC, NBC Universal, or their parent company or affiliates, and may have been previously disseminated by Cramer on television, radio, internet, or another medium. You should not treat any opinion expressed by Jim Cramer as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. Cramer's opinions are based upon information he considers reliable, but neither CNBC nor its affiliates and or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. To view the full Mad Money disclaimer, please visit cnbc.com/Mad Money disclaimer.